It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, November 10th, 2015. Boy, oh boy, do we have a newsletter in store for you guys and gals. Now, don't forget, tomorrow is Veterans Day holiday in the United States. Happy holiday, of course, to all the veterans. We appreciate each and every one of you and all of your hard work and service to all the wonderful countries around the world. And with Veterans Day holiday tomorrow, although most of our markets are open, just the bond markets and the banks, of course, are closed tomorrow, most of our markets will be open for electronic trading. However, we expect volume to be very light tomorrow morning, and the window of opportunity will be very small tomorrow morning, meaning that we're likely to see less volume and less opportunity as far as the time available. Usually what happens on what I call a half holiday, and again, I don't mean that as that is no intention of being disrespectful to the many veterans around the world here that do deserve to be recognized tomorrow. But tomorrow is a day that is a federal holiday in the United States, but the markets are open. Right? So you know there is going to be some necessity trading. There'll be some hedgers getting into the markets tomorrow. You will see tradable opportunities. I don't mean to call it a half holiday in the sense that it should be observed halfway. It should be completely observed. But tomorrow is one of those days where you really got to be careful if you're going to be trading tomorrow. With it being a federal holiday, kids are out of school, banks are closed. Half the people won't be there tomorrow, right, because it's a holiday, and I completely encourage that. So if you do plan on trading tomorrow morning, be aware, expect lower volume, and it's not that you won't be able to get tradable opportunities, but the window will be smaller, right, from 7 a.m. until about 10 a.m. Likely we're going to see this market really slow down tomorrow morning after 10 a.m. Eastern time, and even if it doesn't, if we still see some volatility tomorrow after 10 a.m., be careful. Be careful. So tomorrow, a very happy Veterans Day to all the veterans out there. And of course, markets are open tomorrow, but as you know, be careful. Be careful. Tomorrow's that day. Tomorrow's not the same type of day as we'll see today or on Thursday, right? It's not. It's, again, you're going to see lower volume, many fewer people will be trading tomorrow, and of course, a smaller window of opportunity. All right? I'll talk about that again towards the end of the video tonight. Let's keep going. Crude oil is range-bound this evening, just like yesterday. In fact, you're going to see some consistency across the board here. Just a little bit of range-bound markets. Our plan remains the same on crude and almost all four of these markets. The S&P gave us a new range. We'll talk about that in a second. We're expecting range rotation, two-try rules, and we're focused on failure patterns to catch traders on the wrong side of the market. Okay, so on crude, gold, and euro, all of these markets are range-bound. Now, the S&P, if you recall, boy, that S&P is looking really bearish right now. I'll tell you, it has a new range. So the S&P is not using the same range from yesterday, but everybody else is the same range from yesterday. So, again, tomorrow's Veterans Day, and all four of these markets, crude, E-mini S&P, gold, and euro are all range-bound this evening going into tomorrow's session. We really shouldn't be that surprised. I have to admit, though, the S&P is the one that I'm really surprised. Very big clue, the fact that we didn't get any short covering rally on the S&P. All right, before we jump into our charts for today, and as you can see, I got a Veterans Day strategy for you guys tomorrow. I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link in the description of the YouTube video. That'll take you over here to our trading blog. First of all, upper left-hand corner, you can grab a free pass, come out and test drive our live trade room as a guest for a day. Upper left-hand corner. Lower left-hand corner, name, email address, and then check your inbox. I'm going to send you a verification email to register for our nightly newsletter mailing list. Right below the video tonight, you'll see a spot to download all the charts that I'm going to use in tonight's video. Over on the right-hand side, you'll see a spot to learn more information about how to join our trial membership. It's not the same as your free pass. You can read real member reviews, and we usually have somebody by. Have they already left for the holiday already? No, we usually have that live chat available. It'll be back online. I'll have to restart those chat servers. It's already the holiday here in this office. No, we will be here all day tomorrow. We'll be out of here a little bit early tomorrow, but we definitely will be in the office tomorrow working hard for all of our clients. All right, let's jump right into it. Now that you guys know more information, where are they? Did they take off already? Holidays. Yeah. All right, let's keep going. Crude oil is range bound this evening, just like yesterday. And you're going to see a lot of the same stuff here tonight, which, you know what I always say, right? One day when I pass on to the old trading room in the sky, I hope they bury me not on a Wednesday, inventory day, right? But I hope they bury me in a range-bound market. We love these range-bound markets because, they're easy to catch traders on the wrong side of the market. If I could choose one type of market for the rest of my career, well, and I know a lot of traders will look at this and say, are you crazy? You want to trade this junk? But it's actually quite easy. Range rotation, fading the range expansions, two-try rule, failures. When you understand what you're looking for with these range-bound markets, you really get a very, very easy job. Honestly, I always struggle with trending markets because in trending markets, the best trades look like garbage, and the actual setups that look perfect are usually a trap, right? Isn't that always the case? The ones that have the neon sign in trending markets, those are the ones that usually end up stopping you out. It's those really kind of rough around the edge setups that usually work the best in trending days. Range days are very, very cut and dry. Let's jump in, and you're going to see a lot of these ranges. By the time we're done tonight, you're going to be hopefully going to be an expert at doing all this. And don't forget, we teach all of this stuff to our students here at School of Trade. So we're range bound this evening, just like yesterday. Our plan remains the same. Expect range rotation, use the two-try rule, and focus on failure patterns to catch traders on the wrong side of the market. As we expected, buyers got caught on the wrong side of the market today, and now the sellers are trying to run down to 43.29 and 42.89. And if they fail, we'll be looking for buying opportunities back up to 44.49 and 44.89 on the opposite side. So hopefully this looks familiar from last night, right? Last night's newsletter, we talked about, right, the bearish bias into the trading range. Remember we said last night, right? Fade all the breakouts. 1, fade all the breakouts. 2, fade all the breakouts. 3, okay? Very easy job today on crude. It really was. It was a very, very good day today on crude. A lot of our members doing really well in these environments, and for good reason. Again, they're very cut and dry. Now, here's a really good example. Buyers try once, buyers try twice, and look what happens. Now, it took the news, right? It's a holiday, so keep in mind, it's going to be a little rough around the edges going to a holiday. Volume's a little bit lower. But the buyers try once, the buyers try twice, and look at it just collapse right back down in. Now, here's what happens. The crude sellers, they see this buyer weakness. Remember, guys, the financial markets are filled with some of the smartest minds in the world. Doesn't mean they all make money. It just means we do have some very intelligent people in these markets. And so they're going to see that buyer failure, and what's going to happen is they're going to try to run this price. They're going to basically try, just like in tug of war, right? If you notice the other side is really weak, you're going to pull really, really hard, right? Try to catch them when their momentum is struggling, right? When they're off balance. That's, I guess, probably a good way to describe it, right? So the buyers are off balance here, and the sellers are going to smell that, and they're going to most likely run this price all the way through, right? I think most of us have heard this before. If a market can't get the job done, it's going to overcorrect, wham, right? Almost like a rubber band with aggression in the opposite direction. And that comes from people giving up on it, stops getting run, cherry pickers, right? Slamming that price down. So when we see these buyers fail to push higher, it tells us if they get taken out, and we know they got taken out because where their stops are going to get run, bam, right? They get taken out. Okay, buyers are off guard right now. Now, there may be some shenanigans around here, but these sellers are going to try to run down to the next range expansions, right? And that's where I get 44.49. Sorry. That's where we get the 43.29 and the 42.89, right? 43.29, 42.89. So the sellers now have their mark. They're going to try twice to move it down to that next level, 43.29. If they can't get that job done, what's going to happen? The buyers are going to, they're going to smell it, and they're going to know to roll on them, right? And it's not just going to go to the opposite side. It should go through the opposite side, right? With aggression. That's the idea behind a range, right? The market has their balancing point, right? Here was the original trading range from yesterday. The market has the balancing point, right? Up and down and up and up. Buyers try once and whoop, they fell, right? But remember, when you slip and fall, what usually happens is you end up going further in the opposite direction, right? So now we expect it to crash back down to the opposite side. And now remember, nothing's guaranteed. If the sellers can't get the job done, whoop, 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 right, it comes right back up. And again, it won't just go to 44.09. It'll go to 44.49 and 44.89. 44.89 is the ultimate target if they can't get that job done to the opposite side. Again, I know it sounds complicated at first, and this is what trading is all about. Day trading falls into that category of hard to learn, easy to do. Think about this for a second, right? Take brain surgery. Okay, maybe you're a brain surgeon. Very hard to learn, very hard to do. Difficult job. Think about digging ditches. A very admirable profession, right? Digging ditches are easy to learn, but hard to do. Think about that, right? Manual labor, hard to do. Day trading is difficult to learn and then very easy to do. Trust me, it's done like that by design. It's job security for the folks that are already in that elite club that actually understand how this works. Once you learn how to trade a range, it's going to feel like you're walking into a candy store and they're just handing out candy all day long because you understand the range, the balancing, the two tries, right, and the rotation back and forth. And remember, when the buyers fail to go higher, give them two shots. They're going to overcompensate, and really, they're not overcompensating. They're being attacked by the opposite side, right? We slam back in the opposite side, and usually what's going to happen is it's going to overdo it, right? It's going to overcorrect all the way back down, okay? So we have our balancing point here on crude oil. We have the original trading range. We're looking for range rotation. Buyers failed at the highs here. We expect a run at those lows. Buyers, don't go giving up on me yet, though, because if those sellers fail, whoop, right back up, right, and we go running at 44.49 and 44.89. Again, get to this market early tomorrow, right, and wear your helmet after 10 a.m. Let's keep going. Next up on the E-mini S&P. This is the only market of the evening that has a new range. Okay, yesterday's range was a little bit narrower. They did expand out that range. I gotta say though, I have to say, I don't usually bring the previous day back into this when there's a new range for today, but I gotta say though, it's pretty, that strong move down, I mean, we didn't see any short covering today. Remember from last night's newsletter, we said, guys, that's a big, strong move down. You would have thought there was going to be a little bit more short covering, right? Get a little bit higher up there. So, definitely, it's definitely looking, it looks heavy. It looks very, very heavy right now. Now, my opinion is my opinion, right? We're going to trust the chart, as we always say. But everything here feeling very, very heavy right now in the S&P. I'm very surprised. I'm surprised we didn't get this price to jump a little bit higher today. Nonetheless, though, here we are. Very similar, almost the same, same plan, just different market now. This is the S&P 500. Also trading inside of a range. Buyers. Now, okay, here's a great example. What a beautiful example, right? Here's my balance, right? We'll say 73.5 to 66 quarter, whatever you want to call it. It doesn't really matter. The bottom line is that we're balanced, right? We can see that flat moving average, double tops, double bottoms. Okay, we've got our balance point now. Buyers break out to the upside. They try once. They try twice. What's going to happen? Let's see if you guys have paid attention. Where are we likely going to go? Don't cheat, don't cheat, don't cheat. Where are we likely to go if we don't test that next level? We're likely to get, bam, right back down in, right? So buyers try once. They try twice. If they're unsuccessful, and what do I mean by unsuccessful? If they can't complete the bull rotation higher, right? If they can't get to that objective, if we can't finish the objective, we're not just going to dilly-dally here. The sellers are going to smell it, and they're going to aggressively attack this market because they know they've got the buyers off balance right now. They know where their stops are. Their stops are going to easily be placed right below that low, maybe a few ticks below. Who knows? Who cares? But we do know the sellers are going to attack. They're going to attack not just the opposite side of the range at 2066. They're going to run after that previous low of day. They're going to run after that bull failure target down here at 2059 and possibly all the way down to 2051.84. Okay, remember, that pendulum swings up and then whoops, it's not going to correct back into the range. It's going to correct, think of the pendulum, right? All the way back through it. Now, if we do test that bull rotation target, right? Buyers try once, buyers try twice. If we do successfully test that 2080 area, now we focus on this range. Ding, 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 light bulbs going off. I hope so, right? And again, this is what we do every day here at School of Trade, right? I'm going to make sure that you get better at this every single day when we trade this together every day in our trade room, okay? And our chat room. Chat room guys love the S&P 500, right? So now we expect range rotation. We break out, two try, can't do it, slam right back down and right. You get the point now, okay? Now, what's up with this channel you see here? This channel is a phantom channel. Now, when I say phantom channel, what I'm referring to is we have to respect it, but smart, wise traders are going to use that channel for traps, right? Because you know what's going to happen. Buyers are going to think this is a trend. They're going to try to buy the low, and when it fails, the smart sellers are going to sell right into those stop losses. Yes, we do still need to respect that channel, but no, we do not trust it, and you shouldn't either. Okay. Now, again, I don't know if that channel is going to hold right now. It might hold on the way up to test that bull rotational target. That's not the point. I will be waiting if it fails. Okay. I don't know if it's going to hold, but I know when it fails. And when it fails, we'll be ready to sell with those buyers failing and, again, looking for range rotation from there. As you can see, we got your levels. We got your plan for tomorrow on the E-mini S&P. Get to it early tomorrow. Shall we keep going? Whoa, gold, 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 gold. All right, now, moving on to the yellow metal here. The GC, gold is sideways. Same situation here. Same situation, folks. Right? As you can see, same range from yesterday. I gave it the plan from yesterday, right? Look at the sellers trying and failing. Look at this easy opportunity here to buy this low. Now, again, day trading falls into the category of hard to learn, easy to do. Once you learn it, again, it's like walking into a candy shop and they're handing out Tic Tacs all day long, right? Winning trade here, winning trade there, failure trade, winning, right? It's very easy once you learn it. So I don't mean to say it's easy. Why don't you know this? Because I'm telling you right now, the vast majority of traders, if you ask them blindly, would you rather trade a range day, right? A range bound market or a trending market? They would definitely say a trending market. Spoken like somebody who probably doesn't have much experience. Because trending markets, in my opinion, are more difficult than range-bound markets because you're always cycling. And again, like I said earlier, right, the trades that you need to take in a trending market look like dog crap, and the trades that you shouldn't take look like beautiful setups, right? It's a game of wits when it comes to trends. Ranges are just understanding how it's done. So here we have it, right? We got our trading range here, balancing there. Buyers go up, try once, try twice. Where are they going to go? They're going to slam back through. But wait a second, though. They didn't get the job done. They go to the low. They try once. They try twice. They can't test the 82.6. And what's going to happen now? The buyers know where their stop losses are. They're right there. All we have to do is get to that stop loss. It's going to launch back in the opposite direction. So right now, we should have no problem getting to that 1093.6. We should have no problem retesting the high of that range. Okay? If we don't do it now, it'll be eventually, right? Again, we're going into the overnight, Asian session right now. It will be low volume, and it will be low volume for the news for the holiday tomorrow. But as of right now, I see seller failure on this chart, which means we're going to need once. We got one more try here to get back up to that high. It's most likely going to happen. In fact, it's most likely going to try to run all the way up, possibly to that big round number tomorrow, before we go into the next range. Then we go into that range, right? 2-try rule, range rotation, focus on failures. Again, the broken record continues. Same strategy, same rules, basically the same results, different market. Always, 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 don't forget, the range is the king. The range is the king for the gold. And shall we wrap this up with the euro? What a beautiful example on the euro. Everything we talked about already today now comes into play. Now, if you watch the beginning of the video and now you've got some practice, what do you think happened here? Look. Last night's video, right, we talked about this trading range. Buyers try once, twice, bam, right? It's not going to go just to the opposite side. It's going to go, remember, buyers are off balance. Buyers are off balance. Take them down. It's going to overcorrect, right? Just like if you slip and fall on a flight of stairs, right? You're not going to fall with the same momentum you slipped. You're going to fall with 10 times more momentum because your body weight takes you there, right? Think of that pendulum, right? That pendulum, it swings all the way up and then all the way back down. It's not going to just swing halfway down. It's going to go all the way through, right? And that's fueled by bargain hunters, cherry pickers, right? It's fueled by stop runners, right? Aggressive sellers into those stop losses. And of course, it's a little bit of it is because the buyers realize they're wrong and they join the sellers. Okay, so now here we go. We finished the bear rotation down to that 0686. We go up now. We successfully rotate to the 073. Okay, think about it. Where should we go now? Where should we go now? We successfully, think of it the game of tag, right? 0686, tag, you're it. 0733, tag, you're it. Where are we going next? Now we're inside the range below. Where are we going next? 0686, I'm coming after you now. Oh, wait a second, can't get it done. Where are we going? Whoop, I fell. And I'm going where? 0780, tag, you're it. 0733, tag, you're it. 0780, tag, you're it. I'm trying to go up to 0827, trying. Nope. Back down, right? Range rotation, 2-try rule. Focus on failures. All right, guys? I do not expect a new trader to understand any of this. That's the best part. No indicator will tell you this. Okay, you're not gonna read this in a trading book 15 years old on Amazon. Okay, this is today's markets, using today's price action, using today's techniques, but using the same basic principles that have been around for over a century. It really is remarkable when you think of it that way, right? Our great ancestors of technical analysis passed this down to our generation, and now we apply it to this euro market, gold market, S&P 500, and crude. All right, guys? So we're expecting right now bear rotation down to 0686. They'll then try to rotate down to 0639. Okay? We got a gap overhead at 0774. That'll be an easy price magnet there. So with that gap overhead, look for sellers to try twice, snap higher, test that gap, test the previous high of day, test that 0827, right? That'd be your bullish scenario. And then, of course, your bearish scenario would be range rotation down, right? Fail to go higher, slam back down, 0639. Guys, looking forward to tomorrow morning with you guys and gals. I hope you enjoyed the newsletter today. I wanted to take a little bit more of an educational approach to the newsletter today. Don't forget, we teach all of this to our students here at School of Trade, live in real time in our trade room every day, our chat room every day here at SOT. And I have a few more seconds of your time here. Gosh, get back to work over there on that live support. Man, I want to remind you guys, head over to schooloftrade.com. Register for our free trial. You're going to learn more with me in my free trial than you will anywhere else on the interwebs. I can guarantee you that. I'll also send you an invite to come out and test drive our live trade room as a guest for a day. And of course, you can learn more about our 3 levels of membership. And we always have someone standing by 24/7. Guys and gals, before I let you go, don't forget to hug a veteran tomorrow. Don't forget, we really appreciate your service. And hopefully I'm not the only one to tell you this, but happy Veterans Day tomorrow. Happy holiday to everybody out there. I always think that holidays, big or small, no matter what we're celebrating, are a great opportunity for us to take some time for self-reflection. You know, take some time to think about why you're working so hard. What's the why, as they say, right? What are you working so hard for? Spend some time with the kids. Yeah, you know what they always say, right? You can't take all the ticks with you when you die. So if the market's going to give you a half day tomorrow, why not invest that time with the people that you're working hard for, right? I know I will. I hope you will as well. So happy Veterans Day out there. The next nightly newsletter will be on Thursday evening. Come back and see us on Thursday evening. Thursday morning. Enjoy the holiday. I'm out of here, guys. Don't forget, send me some feedback. JJ at School of Trade. What do you love? What do you hate? How can I improve? Give me a thumbs up on the YouTube video. Appreciate the feedback. And don't forget, keep in touch, guys. No questions too big or too small for us here on our live support on the homepage. I'll see you guys next time. Adios, amigos. Bye-bye for now.